Now, American companies in China are warning that policy uncertainty and uneven market access could undermine business confidence and long-term investment, even as China remains a critical market for many U.S. firms. Well, that's according to a new white paper by the American Chamber of Commerce in China. Outlining its key policy priorities for the year ahead, the business group is calling for tariffs and export controls to be limited strictly to genuine national security concerns between Beijing and Washington. It also urged both governments to rebuild dialogue channels at all levels, even as high-level engagement shows some encouraging signs. This comes ahead of an expected visit by U.S. President Donald Trump to China next month. Now, the recommendations come against a complex global backdrop. An earlier business climate survey showed that China's slowing growth, added as a survey option for the first time, was cited by more than 60% of respondents as their top concern. And that pushed strained U.S.-China relations into second place after topping the list in recent years. Industrial overcapacity also entered the top 5 challenges for the first time. Well, AmCham is also calling for clearer policies, more consistent and transparent implementation of regulations, and fairer market access for foreign firms as key priorities going forward. And to help us unpack this report, let's bring in Michael Hart, president of the American Chamber of Commerce in China. Well, thanks, Michael, for joining us. Let's start with the wider global picture here. We've got rising tensions in the Middle East that's driving new energy and shipping risks as well. So, Michael, how are U.S. firms in China reacting to that? Are they changing their outlook or investment plans?
So it's great to join you. I think the first thing to say is that China across the board, whether it be American companies or Chinese companies, haven't yet seen much impact from the Iran crisis. It's been very interesting. If you look back over the past 4 or 5 years, what China has done is it has changed its source of energy. So China is still a huge importer of oil from the Middle East, but they have built up their energy grids with solar and wind. They've also electrified their cars to a large extent. Roughly 50% of all cars now being sold are electric. And so China hasn't yet seen the impact, also because I think China has reserves of energy. But when our American companies in China look around the region and see that other countries are starting to feel an impact, it starts to feel a little bit like COVID 2.0, where people are starting to think about their overall supply chains, how China is linked to factories in other parts of Southeast Asia or other parts of the world. And so far, American companies haven't been impacted in any significant way by Iran, but they're certainly taking notice and trying to make preparations. I should say also, what we hear a lot is China is making comments to everyone, look, China is the stable player in the world. And so China is certainly making hay out of the crisis in the Middle East.
So, Michael, if we turn to the diplomacy now in focus, which is this potential Trump visit to China next month, what are businesses hoping that could actually, move the needle? What sort of outcome are they looking at? And how grounded are these expectations in reality?
So I would say the visit is very important, but in some ways, expectations are fairly low. When I say fairly low, the most important thing is that President Trump and President Xi meet and that they tell their two respective sides that let's move forward and work together. Because I know a number of things right now that we're trying to do with the Chinese government officials and other things are being kicked down the road because mid-level officials are waiting for President Xi to say it's okay to work with the U.S. In some ways, China has been fairly restrained. They didn't do anything specifically after Venezuela or after the Middle East crisis other than make comments publicly. But companies are looking for a sign from President Xi that it's okay to work with the U.S. That's the first thing. The second thing with the visit is the actual deliverables. Now, we've been researching this for a number of months, and we've been told in Washington to expect a skinny or a narrow visit in the sense of there won't be a huge amount of deliverables. Some of the things on the table could be around agriculture. So it could be more exports of beans, soybeans from the U.S. Another would be some restrictions in China reduced on beef exports from the U.S. And the third would be aviation. So those are potential things that the U.S. could get. But people aren't looking for a grand bargain or a huge long list of things, but 2 or 3 things would be helpful. And again, the most important is the sentiment that President Xi okays it for folks to work with U.S. companies.
Right, and staying with that possible summit, I mean, if there is a business delegation that's around this Trump-Xi meeting, what would its makeup? I mean, are you looking to see, who's going with Trump, and how would that tell you how American companies really see China at this point?
Yeah, so it's interesting. What we're hearing right now is effectively what I'd call sort of the one and the one. So it's basically one whole day. President Trump's not going to be here for very long, and it's going to be one city. So it's going to be just Beijing. Now, if you contrast that with other visits earlier this year by the leaders, national leaders from Canada, from the UK, from Germany, and recently from Spain, many of them had larger delegations and longer term visits, like multiple cities in multiple days. So President Trump is going to come in for a short period of time. We do hear that he's planning to bring a couple cabinet secretaries with him, but they're not going to spread out. They're going to stay together, we understand, in single meetings. And there will probably be a series of CEOs with them, probably consistent with the trade. So we expect to see some in agriculture, some potentially in aviation, but probably not a huge group of of CEOs coming with the president. But keep in mind, President Trump sometimes can change his mind at the last minute and summon CEOs to come with him. But right now, we're expecting a relatively narrow visit, short period, one city.
Right. I want to talk more about your report. I mean, basically, it's flagged ongoing concerns around policy clarity and market access. So, Michael, how are companies, the firms, reworking their China strategies, when the operating environment at this point still feels very unpredictable?
Yeah, so to start with, one of the things that we remind the Chinese government is we recognize that China over the last 40 years has made huge progress, and China is very proud of what it's done. And we say we absolutely recognize some of that is because of Chinese hard work and Chinese innovation, but some of that was also because of key investment and participation in the economy by foreign firms. And we want to continue to see our firms from AmCham China participate in the Chinese economy. One of the areas we are seeing challenges is around government procurement. So if you think about healthcare, whether it be pharma or medical devices, when you sell into the Chinese hospitals, you're selling effectively to the government. And so government procurement has been an area where China has been trying to steer purchases to domestic companies, and that doesn't seem particularly fair. In some cases, there are challenges with U.S. companies getting equal access. And so we continue in our annual white paper to touch on the areas where we don't feel like access is equal. The other challenge is that sometimes the central government would say, yes, we want to make sure that American companies or foreign companies have equal access. But when it comes down to the local provinces, sometimes the implementation is not necessarily consistent. And so these are areas that we call out. I should say China recently also released a rule around supply chains. We're still trying to understand it, but it looks like it may put pressure on companies who are thinking of diversifying their supply chains away from China. And again, we're trying to understand the details of that. It doesn't seem to make a lot of sense to us, but we're looking certainly for ways to continue to see our AmCham China member companies participate in the China market like they have done for years.
So despite all those pressures, Michael, where are U.S. businesses still finding the strongest growth opportunities in China over the next year or so? And what's giving them enough confidence to lean in?
So there's a couple things here. I mean, one of them, many of our companies are aimed at sort of the middle class or upper middle class consumers. You don't necessarily want to address the entire China market, but China does have a wealthy middle class, and that's been a successful market for many of our retailers and others. The other thing to keep in mind is that China, because of its scale, so China is enormous, and in almost every industry now, scale wins. So you need the scale of manufacturing, you need the scale in terms of sales to support R&D and research. And so China is particularly strong in certain areas of research and R&D, whether that be life science and engineering and manufacturing, et cetera. And so our American companies want to, number one, tap into the wealthy Chinese market, and two, they need the scale of participating in the China market to support them globally. One of our CEOs told his company, look, if you don't want us to play in China, what you're actually advocating is for our company to be smaller globally. Is that what you want? And very few companies want to get small globally. And so you do need to participate in China and the large market that it is.
I really appreciate your candid insights and perspective on the business climate in China. Thanks so very much, Michael Hart, president of the American Chamber of Commerce in China.